Now, to rejuvenate its oil and gas sector, Nigeria is expanding its 2024 licensing round to include an additional 17 deep offshore blocks, bringing the total number of blocks on offer to 36. Now, this move, accompanied by reduced entry fees and an extended registration deadline, aims to attract significant investor interest and bolster the nation's oil production. So this morning, I have Tolu Aderemi, partner, Perchstone and Graeys LP, who has been standing by to help us understand this better. Tolu Aderemi, thank you so much for joining us.
Thank you very much for having me.
Okay, now, so the Nigerian Upstream Regulatory Commission cited tremendous interest from investors as a reason for adding more blocks. Now, how significant is the interest from investors? And will you, of course, we need you to actually elaborate now on the potential factors driving this interest, especially considering the decline in the onshore production.
All right. I think the answer is pretty simple. Investments, they go to very friendly climates. And you juxtapose two main points. One is the divestments, or what you call the serial divestments in our oil assets, in our oil portfolio. And the second is the increased interest in the additional 17 oil assets that's now been added to the initial 19 that the NUPRC had put up. So let's take the first part of it, which is the good news, that there's increased interest generated, from potential investors to acquire interest in Nigeria's oil assets. The first point to note is that we now have a stable law, which is the PIA. One of the things you will notice is that in the last 18 months, in the last 24 months, we've had most of our major players exit the country or exit their their onshore assets. And the reason is very simple: instability in our regulatory framework. So for about 20 years, we've been unable to pass the PIA, and no investor wants to put in a dime in an economy that is unstable. If you juxtapose that with what has just happened with the NUPRC, it's unprecedented if you look at it. In 2020, not even 2021, a few months ago, we were talking about 19 oil assets. Today, we've added another 17 to it. Two things responsible for that. There's increased data, and there's a bit of more confidence in the market. And this is why you'll see increased interest in the bid round that has just been opened or extended by the NUPRC. And I must say that the extension is not an extension of the entire process, which I think ends somewhere end of January 2025. It's just an extension of the registration and pre-qualification period. I think from which should have ended June 25, that's tomorrow. So it's now been pushed to, I think, somewhere early July now. It's just that period has been extended, to attract more participation. And I think it's a plus for the country.
So in terms of attraction and impact this might have, quite a number of people within that sector are concerned of how much, in the terms of long-term and short-term, Nigeria will be able to benefit from this. And why are they saying this? They are actually putting it out, saying that there are some oil majors that are set to be departing onshore fields. So when you look at the shift towards the deepwater exploration, how are we so sure that what we're going to get back in return would be extensive and appreciable?
All right, this ties to why we're having, one, a shortfall in our crude production, and two, why some of these oil majors are exiting. If you notice, most of the divestments that relate to onshore assets are not really deep water assets. If you also see that increased interest in this year's bid round is as it relates to the 17 offshore assets that the NUPRC has now added, to the portfolio. So what that tells me is that there's a reaction from the IOCs or the oil majors, and even the oil miners, if you like. And this reaction is not all connected with host community issues. So we're having quite a number of issues with host communities, and this sometimes relate to the onshore assets. And so if you want to de-risk that part of your business or your investment, then you are better off, to move offshore, which is exactly what we're beginning to see. Does it mean that, look, there are no crises offshore? There are, but they are quite minimal. But what you find more is as it relates to the onshore assets. So I'm quite optimistic, that, look at Total Energies, for example, which had announced that, there was a departure in the last quarter. I understand they're already talking to NNPC in respect of another asset. So when government sees, one, there's stability in your laws, two, there is transparency, three, there will be consequential confidence for investors to invest in your market. And that is what we're seeing. Unfortunately, the big elephant in the room, which is security or insecurity, has really not been fully addressed. It's been reduced, but it's not been completely eliminated. But the incidence of it is lesser offshore, if you see what I mean. And that is why, there's increased activity in the offshore oil and gas.
Okay, so let's now look at how it applies to other oil-producing countries on the continent. Now, Nigeria aims to compete with Angola and Namibia for investments. How effective do you think the reduced signature bonus and the streamlined application process will be in achieving this goal?
Well, I think the reduced signature bonus is a smart move. You must be competitive in the world, particularly across the continent where you are beginning to have competitors. I'm excited when I read that even OPEC continues to adjudge Nigeria as the lead in terms of oil production, despite a declining production. Now followed by Libya and I think Algeria in that order. So clearly, if Nigeria wants to maintain its pride of place, its position as the lead production country, obviously it has to continue to create competitive incentives, for the investors. And when you compare it with what happens with OPEC, as well as, Russia and America, you can tell that once there's a cut in OPEC, or once there's an adjustment in OPEC, certainly America will also consequentially adjust, ditto, for Russia. So I think Nigeria must continue, to remain relevant, must continue to be competitive. And most importantly, which I think the government of the country is doing, must demonstrate, that it is interested in breeding a good investment climate. I think that's very important to give confidence to your investors. That's what President Tinubu, I believe, is doing. So we must continue to retweak and review, the laws and the regulations. But let me give you an example. When President Obasanjo was president, these same onshore assets that are now being divested were the incentives given to the IOCs when government wanted them to develop the deepwater blocks. So what President Obasanjo did at the time was, for an award of a deepwater block, you will give me a commitment to develop my onshore assets. And what he also did was give them tax incentives via a side letter. Well, what became of the side letter and the issues around it, we'll discuss it another day.
Of course, definitely we will. And I hope that even with this, the government can ensure that that area where oil is being mined will be secure for investors to continue to ply their trade there. Tolu Aderemi, partner, Perchstone and Graeys LP, thank you so much for joining us and for talking to us.
Thank you for having me.